Hi viewers! Welcome to our Remarkable Finance channel. Our topic today is investing money for the year 2022. How do we invest money at the easiest and fastest profitable way? Who is the fastest self-made billionaire ever in the US? One of them is J.S. Walker, who became a billionaire in just 1 year. Do you know that Jay Walker and Warren Buffett have few things in common? They are both self-made billionaires, and at a young age, they both delivered newspapers in their neighborhood riding a bike. Now that is pretty interesting to start with this video for today. So join us and watch until the end to know more about how to invest money and convert it to more money. Before we move on, please like, share, subscribe, and click the notification bell to get updated with our new videos. Aside from Jay Walker and Warren Buffett, let us see who else is the fastest self-made billionaires are. Number 1, Jeff Bezos. Became a millionaire in 1997 and then became a billionaire in 1999 with his Amazon stocks offered publicly in 1998. Number 2, Mark Zuckerberg. Facebook CEO took 1 year to turn from millionaire to billionaire. Number 3, Jan Koum. In 2009, Apple's App Store was launched. It was then Jan poured his time, effort, and resources to building WhatsApp and was sold to Facebook for $19 billion in 2014. Number 4, Eduardo Luiz Saverin is a Brazilian-born billionaire entrepreneur who owned 53 million Facebook shares in 2012, valued at $2 billion at that time. It took Warren Buffett, CEO of Berkshire Hathaway, 55 years to join the Billionaires Club. J.S. Walker, an American entrepreneur, chairman of Walker Digital, which deals with digital networks and is one of the billionaires, got his wealth after he founded Priceline.com, a website presenting different discount offerings. Between 2000 and 2001, his net worth jumped from zero to billions, but that wasn't sustainable. While Buffett's wealth is stable, Jay Walker's net worth crashed by October 2000. Buffett's wealth is the kind of wealth that anyone would want to build. Making money is complicated. It is taught, competitive, and brutal. You will fail if you do not know how to follow the rules. Most people work hard their entire lives but end up poor because they do not know how to multiply their money. Investing is the key to make money grow. We therefore discuss doing investments. Let us make an assumption of investing a savings account of $500,000. How should the money be invested? One way is to buy a real estate and rent it out. Every month, a minimum of $3,000 can be paid for the rent. At the end of the year, at least $36,000 income has been received for renting out the real estate. Second is selling out the real estate. After a few years, the initial investment of the real estate can be acquired back by selling it. Real estate does not depreciate in value, so it can be sold at a higher price. The original investment of $500,000 could become $1 million. That is how to make more money. Another assumption is a savings account of $1,000. It is not possible to buy real estate for $1,000. It is not even enough for a down payment. However, $1,000 can be invested elsewhere and let it grow. How can $1,000 be invested? The easiest way is to deposit it into a savings account and let it generate interest. The bank will keep the money and lend it to another person at a higher rate. However, the interest rate for the savings deposit is very low. It is not worth depositing it in the bank for a low interest it generates. At a rate of 8% per annum, the interest will be $80 only. After keeping it in the bank for a year, it is not at all worth it. Another important fact is that inflation will depreciate the $1,000. If it depreciates at 3% every month, the computation is 1,000 multiplied by 3% equals 30 multiplied by 12 months is equals to 360. This means that the actual face value of the $1,000 will only be $640 after 1 year of depositing it in the bank. It is ridiculous, isn't it? Why keep it in the bank then? Another option to invest the $1,000 is to buy government or sovereign bonds. It is a debt obligation or security issued by a national government to support government expenditures. Let us say the government wants to construct an expansion road in a remote area. The government has no budget to do that. So the government can issue an IOU document. The paper acknowledges that whoever owns it is owed by the government plus interest. In other words, it is a promissory note to pay a debt obligation. Government bonds are dependent upon the prevailing interest rates. When the interest rates are low, then the interest of the government bonds will be low. However, government bonds are the safest investment one can ever make. Any investment carries with it a certain level of risk. To lend money to the US government, there is a very little chance that the US government will fail to pay its loan. US bonds are considered the safest investments in the world but may have low interest rate. To make a higher return, let's say a maximum of 30%, the option is investing in the stock market. These are the topmost stock companies of 2021. A. GameStop Corporation. Year-to-date return, 815%. An American video game, consumer electronics and gaming merchandise retailer. B. Upstart Holdings Incorporated. Year-to-date return, 321.1%. A cloud-based artificial intelligence lending platform. C. Moderna Incorporated. Year-to-date return, 193.6%. An American pharmaceutical and biotechnology company based in Cambridge, Massachusetts that focuses on vaccines. D. Devon Energy Corporation. Year-to-date return, 175.3%. An energy company engaged in hydrocarbon exploration in the US. E. Continental Resources Incorporated. Year-to-date return, 167.1%. A petroleum and natural gas exploration and production company in Oklahoma City. Aside from the above-mentioned top 5 stock companies, Elon Musk's Tesla stocks have increased by 725.6% as of June 9, 2022. This is one of the attestations how Elon Musk became the top richest man in the world. Anyone could invest in the stock market to make money double or even triple, but there is too much risk. Government bonds are almost risk-free, but individual companies have risk as it has tendency to fail. Any negative report on earnings can plunge down the stock price. The company might create and introduce a new product, and if the consumers do not patronize the product, it would surely make negative headlines, thus driving the stock price down. For example, Coca-Cola is a well-established company and its chances to fail are way lower than Tesla. The famous Coke company has been stable over past decades, but Tesla has still more room to grow with its supercar models. That's why Tesla grew by 725.6% this year, but Coke is 0.57% down as of 9th of June 2022. Another way investors can do to minimize their risk in stock market is by investing in an index fund. Buying a share of index funds means buying a tiny share in the top 500 US companies. The most famous one is the SP 500, which tracks top 500 US companies, so an index fund would basically invest in these top 500 companies. Some companies will fail, others will thrive. The next question is how to buy the shares from the index funds. There are only two ways to buy the shares in the index funds. First is to find a broker, someone who is qualified to sell stocks, secure and can withstand the ups and downs of the stocks. Charles Schwab, Fidelity Investments, E-Trade, and Merrill Edge are some of those brokerage firms. These brokerage firms have created apps so that anyone can easily buy shares from the comfort of the smartphone. Second is to download one of those apps, sign up, and you can start investing right away. That is an awesome way to invest money with sure profitable outcome. Bottom line, what we have learned about investing money. Warren Buffett's strategy on buying stocks is being emotionally intelligent and patient to cope with risks on a long-term basis. He buys on the assumption that the stock price will be down on the following day, but it would increase 100 times in the next 5 or 10 years. That is how Warren Buffett is emotionally patient on buying stocks and profits much from the stable emotion. Applying to yourself, determine how much risk you can take without going crazy that you may lose all your invested money. So if $1,000 is all that you have, perhaps risking it all is not the wisest decision. That's all for our video today. We do hope you learn from these ideas on how to invest your money. We will see you next time on Remarkable Finance. We upload videos every other day. Please do not forget to like, share, and subscribe. Share with us your thoughts on how to invest money on the comments below. We will be glad to read and reply to your comments. Check out other videos from our Remarkable Finance channel. Thanks for watching. Bye for now!